Tell me the story of what's happening behind your platform and your user base.
I think there's a real momentum. You can tell by looking at our metrics and the qualitative measures that we take, and just the fact that we've outperformed the credit card industry, which is our direct competitor, in terms of managing credit and just the sheer number of launches and merchant signings. Like every metric that I could cast my eye on, say, wow, that is a really good quarter. And so, sometimes you got to take a bow.
Let's say the buy now, pay later space is, let's say, more competitive. Since last year on the program, maybe in that time, Caroline and I spoke with the Klarna CEO, for example. They seem very optimistic, particularly about the United States. Yet you continue to grow. I don't have any data for market share, but could you just contextualize your performance in that sense?
Well, I think we are outpacing them reasonably well in terms of our growth relative to theirs, at least according to the stated numbers. Not that I am too competitive, but
you are competitive.
I'm very competitive. Let's be honest. But the reality is it's a giant market, and all of us together add up to less than 10% of e-commerce, and all of us are now looking at offline. And so just the real share taking that's taking place is happening against cash, against credit cards, against debit cards, all the other payment types. And so there's just an incredible amount of road available to all of us, and Affirm in particular.
What does that mean in terms of the macro context, then, Max? How confident are you of the US consumer, the global consumer right now?
Well, we're about to launch in the UK, so we'll find out exactly how confident I should be about the UK consumer. But the US consumer, again, look at our investor supplement. Credit card companies have built and built and built up their delinquencies, and ours remain very firmly in control. Our consumer is borrowing and shopping and paying back, which is really important for a credit business. But so far, so good. We do not see a major slowdown. We do not see a significant pullback in demand. There's always new industries. A quarter or two ago, I was lamenting the loss of interest in electronics. It came back roaring through the last quarter. Travel is a little bit softer. I think people got their post-COVID fix. But all in all, consumer is effectively shopping and buying and paying back, and I don't see problems.
Meanwhile, you're taking a bow, and the market in particular likes the focus on profitability. Now, I hate to bring them up again, but Klarna actually did post a profit, even though they're still a private company. They're eyeing a $20 billion valuation, and they're cutting costs by leaning into AI. Is that something that you look at, Max, something that you feel you have to compete into?
Well, the good news is that we've been in the AI business since inception. So 100% of our loans are underwritten individually every single time, entirely by machines. And so we've been on the machine learning and AI training since day zero. And we don't think of it as a way to replace humans or to get rid of humans. We think of it as a great tool for increasing productivity, to give us an edge in underwriting, customer service, et cetera. And so, yes, we're very, very active in AI. We have lots of really fun things happening, both visible and not to the investor eye, but it's a huge part of what we do. In terms of profitability, I said it last night on the earnings call, and I just want to make sure I repeat it. This was not a contortionist thing we just did when we said, hey, profitability is on the horizon. It is very much part of the plan. It's always been part of the plan. It's just now close enough where I can say, here's a date with history. We're going to get GAAP profitable and move right past it and do more.
Max and Carol, also bear with me. I am a Affirm customer in the sense that I used Affirm to finance a specific thing. For what it's worth, it was the Peloton tread. But the reason I did it is actually an emphasis on point of sale. Mm-hmm. So when you go through, the audience is familiar, if you go and try buy something from Peloton, it's a kind of a weird transaction, but you're presented with Affirm as an option almost straight away. Do you negotiate that aggressively for those kind of bigger ticket items?
I'm not sure individual deals are worth commenting on, but every deal where we are presented at the point of sale and every deal where you see it up funnel, as one might call it, before you even get into the checkout, are absolutely directly integrated. So we go to the merchant, we spend a lot of time with them making sure that we are as helpful as possible to their ability to sell, be it a Peloton tread or a mattress or anything in between. And that is what gives us a huge advantage. The consumer has the confidence and the clarity of what it might cost them to borrow money to buy something.
Max, while you're here, could I please ask you, there's a story out from Bloomberg Law about a firm facing a class action suit after the Evolve bank breach situation. Comment on that, please.
Probably a very bad idea to comment on ongoing or potential future litigation, so I'm not sure I have anything to say on that. I said it the day of Evolve News, which is certainly unfortunate, that the Affirm card numbers were all safe. We did not need to rotate them and give people new cards. That is now confirmed. No card numbers have been leaked, and our consumers are safe. If you have your Affirm card, please continue using it. It works just fine.